Hi there, Mike Brady with Generosity Wealth Management, a comprehensive full service financial services firm headquartered in Boulder, Colorado. It is May 2025, spring. You can certainly feel it outside. Hopefully, you've spent a lot of time in this beautiful sun. If you're here in Colorado, if you're outside of Colorado, hopefully it's wonderful in spring weather wherever you are. So I want to talk a little bit about current market conditions, but before that, I want to provide the context. I want to kind of tell a story. My experience, and I've been doing this for, meeting with clients for 34 years now. I happened to put it into the computer because I was curious the other day how many trading days, market days that has been. And that's been 15,000 days, 15,000 trading days since I started in August of 1991. That is 55, almost 56,000 trading hours, which is unbelievable. And the reason why I share that with you is I was meeting with someone a month or two ago, and they said, Mike, you're completely calm, and I joked with them that I have ice for blood. And that's because I have seen an awful lot in my 34 years of working with clients in an environment. Every year I can sit here and point out how it's different this year and how there's something to be concerned about. If you're optimistic, there's something to be optimistic about. If you're negative or pessimistic, there's always something to be pessimistic about. And I go with the flow. And it leads me to some of my Mike Brady truisms as I see it, which is how do you be successful as it relates to your life and to your investments and to whole financial future. And I'm going to give you some of my thoughts here. The first one is clearly define what you're going towards. Okay, what is your financial goal? What is your life goal? Because before we talk about how to point the boat in the right direction, we got to know what that direction is. Before we row the boat, we got to know where we're going. And so kind of being clear about what your goals are, and it is okay to have multiple goals. One of them might be to retire at a certain age, or to not outlive your money, or pass money to your kids or to your heirs. Another could be to save for your child's education or grandchild's education. Each of those have different time frames, which kind of boils down to my second thing. One is clearly defining your financial goals, and the second is know what the duration or the time horizon, because that starts to inform how you reach those goals. I mean, if you need money next week, that's considerably different than if you need money 20 or 30 years from now. And both environments are different in how we approach them. The third thing is discipline. Okay, whether that is I want to be disciplined in my income and expenses, I want to be disciplined in how I save for retirement, or I want to be disciplined in how I withdraw money. Saving for being in the contribution phase is completely different than being in the withdrawal phase. So whichever way it is, it's being disciplined in what it is that you are. Whatever phase of life that you're in, treating your life like a business. And sort of the fourth thing that I've found is helps someone be successful is to have control over your emotions. We're not a bunch of Star Trek Vulcans with pure logic. We have emotions, but what we don't do is we don't let those emotions impact the decisions that we're having. We react emotionally. And I have to tell you, this is where I get very cynical. If you've talked with me, your news sources, you've got to think about the news sources that you're consuming, whether that's reading or listening or watching TV, whether they are helping you or hurting you. I have sit here, maybe not today's video, but I have a healthy skepticism because they're not there to inform you most of the time. They're there to incite your emotions. Many of them. I get my news from various sources, and I read almost entirely. And I can tell, even if the reading, it's trying to get me all excited and getting, kind of throwing red meat to people who think already like that. And so red meat to dogs or to the animals to get everyone all excited. Or is it a dispassionate, well, this is the pros, these are the cons, I can kind of see this and that? Or is it really trying to persuade you and get you all excited so that you'll go and do, maybe vote one way or the other, or support one thing over another? Be very mindful of that. And I'm going to put in the rest of the newsletter where I get some news sources that I get it from. Allsides.com, I love Ground News. These are places that have maybe the same article from the left, the right, and the center, so I can sort of see what the truth might be. Optimistic, pessimistic, and right down the middle. Something that might be a little lighter, but something I read an awful lot of economic and well technical analysis, so I can kind of see actual data, not somebody else's interpretation of what that data is. So I think what we're seeing, I'm going to pivot here now. What we're seeing in the market is kind of a normalization, as I see. If you go back to my last couple of videos, my last couple of newsletters, I've said you don't make long-term decisions based on short-term events. So what someone who's prone to be pessimistic might say is like, well, this short-term event is different this time, or this is just leading to a long-term event, and so this is an early. And my answer would be maybe, but we don't know the future. You've got to have some humility. The future is inherently unknown. So what has happened over the last couple of months has been an overreaction, in my opinion. When anybody starts talking to me, especially a TV pundit, that, well, it's so obvious that we're going to have a recession in 3 months, 6 months, 9 months, I discount it right off the bat. Nothing is obvious in this world. You've always got to look at what's the data telling you? How does this play out in an incredibly complex system, which is the world economy, which is also reflected in the stock market. Not only is the stock market filled with a bunch of data of future earnings and past earnings, but it's also human beings with their expectations and their own biases coming into it. So, I always tell people, let's take things with a grain of salt. Let's not get too bent out of shape, because what I have seen over the years plays out time and time again. I think they say that, doesn't, something about rhyming. Oh my gosh, I've got to think about it here now that I'm on a video, but it doesn't necessarily repeat, but it does rhyme. And so, history doesn't repeat itself, but it does rhyme. And, we've seen certain events in the past, but, sometimes it's very similar, but it's never the same. Whenever we go into a kind of a military conflict, you've always got the people on, is this the next Vietnam? Or when we're going to get into a quagmire? You almost have to wait for that to play out again. And, the generals are always fighting the last war. Well, whenever there's bad things that happen in the market, and they will always happen, they have always happened, they're always trying to explain it by what we saw the last time. And so what I'm here to say is that we have seen this time and time again, multiple data points. I've seen it in my 34 years, my 15,000 trading days. And one thing that I have seen is that a well-diversified portfolio has come back. It has sometimes taken months and quarters. In this case, it certainly does look like it has been incredibly short time. If it continues the way it's doing when I'm writing this video, it has been an incredibly short amount of time for there to be a recovery. The bad time in the last 3-4 years has actually been 2022. That has been as a reaction to, as I see it, the Inflation Reduction Act and lots of money flowing in at the wrong time and other interest rate missteps. But we have seen some poor communication, some missteps so far this year, of which we have recovered very nicely, and I hope that will continue throughout the year. If it doesn't, then we will continue to have the discipline. We will keep our duration of mind. We will keep our emotions in check as we reach our financial goals for you. 303-747-6455. Michael Brady. One of the reasons why I don't talk about real technical investment analysis is I like to talk about that individualized with specific clients. But I also believe that if you get some of the four that I've just talked about, you get those under your belt, you get that part figured out. The investments, they just support that. They're almost the least important variable towards reaching your financial goals. If you have the discipline, the duration, the financial goal, defined, and your emotions in check, everything else is good to go. Mike Brady, 303-747-6455. You have a great rest of the month, great June. We'll talk to you later. Bye-bye.